Hello everyone, welcome back, Patrick here. It feels like I haven't seen you in a little while. Well, finally, we got the data for the electric vehicle companies. The third quarter earnings came out. I listened to the calls, I compiled the data, and in this video, we're going to look and see if there are some opportunities left. You guys know that they had been on a tremendous run over the past 2 months. Well, now it seems like it's cooled down a little bit. Well, maybe there are some good opportunities. Maybe it's all overvalued like Rivian. That's what we're going to talk about in this video. So I hope you enjoy it. And if you do find value in this type of video, please like and subscribe. And I'll see you right after the intro. Alright, welcome back. We're going to look at 9 different companies. All of them produce electric vehicles, and we have a wide range here between some startups and more established legacy automakers. So in this video, I'm going to give you an overview of the third quarter. What did we learn? What are some of the challenges? And then I'm going to kind of dig down into each of the company, give you my thoughts, and if I think there are good opportunities there. You're going to see it's pretty easy to spot like the companies that are very interesting to invest in and which ones make absolutely no sense. So I ordered these by valuation. Some companies are missing. For example, I never invest in Chinese companies, so I don't have NIO on there. If you're interested, you'll have to dig into the earning report yourself, and then you can compare the numbers with these. All right, so at the top, we have Tesla at 1.1 trillion, uncontested leader when it comes to electric vehicles. I mean, they reached $1.1 trillion. They passed Facebook. And look at it, their deliveries for this quarter, 241,391, and that is like almost 50 times more than the number 2, which is Ford, which delivered 5,880 of the Mach-E vehicle. All right, so Tesla is in a class of its own at this point. We're always going to be looking for the next Tesla, but that's not going to be for 3, 4, 5 years down the road, right? They have such a big lead right now that it's going to be very tough to catch them. So number 2, we have Rivian at 109 billion. Do I need to say that this is a pretty big joke? I mean, if you invested at the IPO, then you did pretty well at this point. But I mean, 109 billion, even though the company has a lot going for it, it is pretty ridiculous. So after that, we have Lucid at 90 billion, and Lucid didn't have any revenues really this quarter, like 232,000. So what happened is they started production, but their deliveries are really going to come in the fourth quarter. So if I do this video again for the fourth quarter, the numbers for Lucid are going to be totally different, and they will actually start to generate a lot of revenues. So they are at that pivot point right now where we are going to start to get some good numbers for Lucid, and that's why the stock is actually surging. I mean, up 17% again. After that, we have 2 legacy automakers, GM and Ford. Yes, they are in the game. They do produce electric vehicles. While GM's at $89 billion, and they did 4,515 deliveries of the Bolt. Now, GM has a lot of issues right now. The Bolt had a recall. It's not a company that I'm personally really interested in, but notice that the fact that they are still cheaper than Lucid and Rivian, even though they are very well established. So, like, we really overvalue these startups, in my opinion. It's all about thinking what they're going to be doing in the future as opposed to what they're really doing now. And that reminds me a lot of January and February with the SPACs. Well, that's just my opinion. After that, we have Ford, and Ford, in my opinion, is very interesting. That's a company that I'm looking into a lot more right now. So $77 billion valuation. They generated and delivered 5,880 of the Mach-E. But what's really interesting about Ford is they have such a big like reservation number for their Ford 150. It is the most sought after sold pickup truck, while they have 150,000 reservations. So when they actually start cranking those out, they are going to generate tremendous revenues through their electric vehicle division, right? So they're not necessarily going to catch up to Tesla anytime soon, but that is a lot of backlog for the Ford 150, and I really like that. So after that, we have the smaller startups. We have Proterra at 2.67 billion, a company that I really like right now. It is probably my favorite startup at this point. All right, so they generated 52 sales that they delivered, and each of those on average is worth 1.2 billion because they're buses. Now, what I really like about the company is that they're really pivoting into producing battery packs, and so they have a pretty good supply of the cells, while they're going to be assembling battery packs and they're selling them to other companies. So I like the fact that they're diversifying their actual revenue, right? And that gives them more avenues to expand in the future. So Proterra is looking really good at this time. I've been looking to build a bigger position in the fourth quarter. And then you have Canoe. I don't even know why I put it in there. I figured, hey, I covered it in the past. Let's look at it. But zero revenue, zero delivery, light your money on fire, X-SPAC. Literally, like, this company has not proven anything. They changed the entire management. They don't know what they're doing. So I don't know why I added it there, but, you know, 2.39 billion, which is more than Lion Electric. What does that tell you about the market? All right, so Lion Electric, $2.13 billion, 11.9 million revenue, and 40 deliveries. Notice the difference in revenue per delivery here. So almost 300,000 for Lion and 1.2 million for Proterra. So very, very interesting. And Proterra is ramping up their revenues much faster than Lion, even though in the prospectus, Lion had much more aggressive projections than Proterra did. So sometimes it's better to have lower projections and miss less than have very aggressive projections and then completely miss. That's just my opinion. I was not very impressed with Lion Electric this quarter. And last but not least, we have Lightning eMotors, my pet project, the company that I secretly love a little bit, at 610 million. Very, very underpriced still. So they delivered 43 vehicles this quarter, 6.3 million revenues. But notice how the revenue per vehicle delivered is much smaller, 146,000. So overall, with all these companies, I mean, there is one thing in common. They are all complaining about the supply chain issues. I mean, the only one that doesn't really seem to be affected as much by it is Tesla, which I think is because of their team that actually sources these different parts. Right? They have an amazing team when it comes to that. But all the other companies, even the legacy automakers, are really, really struggling to actually produce these vehicles. So it's not necessarily even the batteries. Like in the past, it was mostly the batteries, but a lot of them have been complaining about very small parts. So for example, I heard about the resin for the wiring harness connectors, the adhesives, and why that matters is that until you have like 100% of the vehicle, you can't ship it out. So some of these companies like Lion Electric, Lightning eMotors, Proterra, they have some of the vehicles that are almost done, but they can't ship them out and deliver them. So that's why they keep missing their numbers. So they all talked about the fact that this would not be resolved anytime soon. We're not talking about the beginning of 2022 like we hoped. We're talking about maybe late 2022 going into 2023. So expect that all of these companies, except maybe Tesla, they are going to be ramping very, very slowly in the next quarter. I'm not going to expect like amazing numbers in the fourth quarter, but overall, at least when it comes to semiconductors, that's supposedly getting a little bit better. So the numbers can be a little bit better in the fourth quarter, but they shouldn't, like, we can't really expect that a lot of these companies are going to go from, let's say, 52 for Proterra and then jump to 80 or 100. It's very unlikely at this point. Alright guys, so let's look at each individual company. I'm going to give you my raw thoughts on them, and am I a buyer of these companies at these prices? First, we have Tesla, 1.1 trillion valuation. The company is firing on all cylinders, 13.8 billion in revenues in the past quarter, third on the list behind Ford and GM. Now, I'm a big admirer of Tesla, even though I'm not a big shareholder in the company, and Elon also. Now, I wish he stopped with his antics, right? I hate when he talks about Dogecoin and all the other distractions, but you can't deny the fact that they have been doing all the right things, and the company has really, really ramped up their production and their revenues. So look at how in Q3 2020 they were at 8.7, and now in Q3 2021 they are at 13.7 billion in revenues. Right, so over, or at least about 50% increase in 1 year. That's already very impressive. But if you go down to the earnings per share undiluted, it went from 0.32 to 1.62, right? So they almost 5x their earnings per share, and that really explains why the company is going up so quickly over the past year. They reached that point where the company is growing exponentially and achieved that scale where now they can become very, very profitable. You know, even their profit margin has really improved in the past year. So with that said though, notice how the stock is very volatile. It went up to 1200 plus, then it went down to about 1000, which is now a support, and now it's rebounding slowly. Well, there's always been that big debate about Tesla. Why is their valuation so much higher than the other ones? Look at the multiple, right? Valuation over $1 trillion, when the second on this list and the other legacy automakers are worth like 10 times less. So that's been a big debate. That's why a lot of people have shorted this company and lost tons of money. So personally, I can't wrap my head around this valuation still. I don't feel like I'm getting a good discount if I was to buy the stock at $1,100. So personally, I'm not a buyer of Tesla. If I had to give it a rating, it would be more of a hold, right? You can't really sell Tesla because it always goes up. But at the same time, I don't feel like I would be doing a good purchase if I bought it at 1100. That's just my opinion, right? So I feel like there's better opportunities out there. But with that said, the company is doing fantastic. Now let's go back to Rivian for a minute. This is a company that, in my opinion, at $109 billion is overvalued. I'm not going to be investing in it, but I would make you a disservice if I didn't explain why the stock will not necessarily crash. It might crash, but we can't really bet on that. Personally, I'm going to avoid it. I'm not going to be buying puts. I'm not going to be shorting the stock. And the big reason is Amazon is backing it. And that is the main reason why people have been excited about this IPO for at least 1 or 2 years. People were really looking forward to that. Amazon owns 20% of the company and have ordered up to 100,000 vehicles to be delivered by 2030. And so Amazon basically has a all-you-can-produce contract with Rivian, where anything they can produce, Amazon's going to be buying it. So that provides a big backstop to the company, right? Plus, I want to bring your attention back to a company that was also considered very, very overvalued at the time, Airbnb. When it IPO'd, it was supposed to IPO about $60, and we thought, hey, $60, is that a good price? Oh wow, it's actually going to IPO at $80, it's going to open much higher. Should we be buying or selling? Well, what happened to this stock? It actually skyrocketed to $219, right? So if you actually shorted the stock because it opened higher than 80, you would have lost your shirt, right? So it did go down, undeniably, but look at where it actually went down. Nowhere close to $80. And since then, it's actually rebounded back to almost 200. So that's possibly what we're going to see with Rivian. There's going to be some volatility. Maybe it's going to go down, right? If you time it properly, you might be able to make some money by buying puts. However, to me, that's just not the game that I'm playing. I feel like it's way too risky and too volatile. So for a stock like this, right, that's kind of like a meme stock already at this point, I'm just going to like look at it from afar, enjoy the show, and focus on other companies I actually believe are going to be better opportunities. Now let's get into a big spec play everyone's been looking into over the past year. We've got Lucid. Lucid at $90 billion is not cheap whatsoever. They are at that inflection point as I was talking about where they're starting to do production now and they are starting to deliver vehicles. So I listened to the call. I like the CEO Peter Rawlinson a lot. The guy seems like he has a plan. He's very measured and he's executing on that plan. Plus they have a lot of Saudi money backing them, so that always helps. So some of the highlights in the presentation, right? So they have over 17,000 reservations as of November 15th. That keeps going up, and they have a backlog of over 1.3 billion. So they are expanding their factory that they have in the United States. They plan on expanding into Saudi Arabia, where obviously they have a lot of reservations already. So those are some of their shorter term plans. They also are going to try to demonstrate the SUV prototype next year. So that's going to be a big catalyst once again for the stock. All right, so those are some of the highlights for the company. But again, the big issue is always comes down to valuation. Can you project in the future that the company is going to not only grow into the current valuation of 90 billion, but actually go up from there so you can actually make profits. So the time to buy this stock, in my opinion, was right here, and we had months to buy into it when it was $20, $25, $30. Now at 54, right, it's starting to be more and more expensive, and it's starting to be a little bit less of a good investment, in my opinion. So once again, Lucid, even though I like the company a lot, they're making great progress. Next time I make a video about EVs, we're going to get to have better numbers, but it's too expensive, right? I just can't invest into this one once again. The time to buy was in the 20s. But Patrick, what about the legacy automakers? GM at 89 billion and Ford at 77 billion. That looks like chump change compared to Tesla and some of the startups like Rivian, right? Well, if you guys don't mind, I'm going to set aside GM. It's not a company that I really care about. I don't really follow it that much, right? So I don't have deep insight into it. Let's focus more on Ford. So Ford, 5,800 Mach-E's in this quarter. It is a very, very small number. So why is the stock skyrocketing? It actually went from under $5 in April to $19.39 as of me filming this at the end of November. So why is this company surging 300%, which is even more than Tesla, which doubled in that period? Well, in my opinion, there's two big reasons. So I might be forgetting something, but I don't think so. You have the fact that they have a 12% stake in Rivian, which just IPO'd at $109 billion. So their 12% is worth about $13 billion in itself. Well, that's going to be reflected in the company's valuation, and that's one of the reasons why it's been going up. Look at how it's been skyrocketing since Rivian actually IPO'd. But there's more to it than that. There's also a lot of excitement about the company's push for electrifying their fleet. I mean, they're a suite of vehicles. So I'm not going to read everything here. You guys can look into it, but look at how on page 5 of 39. So they're really putting it at the forefront of their presentation here. They are really investing massively in electrifying their vehicles. So they know they're years behind Tesla. Now they actually want to start to catch up a little bit, right? So they're investing heavily. So Ford and SK Innovation plan to invest $11.4 billion in Tennessee and Kentucky. They're going to be investing a lot in factories for the electric vehicles and also for the batteries. And something down here that I want you to look into is JV in Turkey invests $2.4 billion to produce electrified transit vans and battery packs. So they're not only going to compete on the actual vehicles and more retail customer front, but they're also going to try to compete on the commercial side, right? So companies like eMotors that is sourcing vans from Ford might be affected negatively about this, right? They're going to be competing against each other basically. So that is great. I like Ford a lot for that, the fact that they're really trying to invest a lot and catch up. The only issue that I have with it, what I'm really not sure about is this is going to cannibalize their other sales. So it's not like Tesla where, let's say that they had 1,000 sales and now they went to 241,000. Well, that's a massive upgrade over the past several years. But Ford is already selling those vehicles. So if they sell a Ford F-150 Lightning, well, they probably would have sold that vehicle as a ICE powered vehicle in the first place, right? So they're not necessarily going to increase their market share by a lot, so it makes it very, very difficult for us to calculate a potential growth from here. How much market share are they going to gain from electrifying their vehicles? I don't have the answer to that, so I'm really interested in the company. I feel like it's extremely cheap compared to Tesla, right? But I'm not sure yet how that's going to play out. So I'm going to be continuing monitoring it. I'm not ready to invest in it yet, but I find it very, very interesting. And I mean, the stock has been outperforming over the past few months. Let's get into some of the spec plays, and first, I'm going to spoil it. Proterra is my favorite company out of all 9 of these, right? So Proterra is still a company that's struggling. They're burning cash. There's some issues with the company. I'm going to start with the negatives, and then I'll get into my bullish thesis. This is one of the best opportunities out of all 9, in my opinion. So Proterra, 52 deliveries, 62 million in revenues. It's still a fairly small company, and there are some negatives. If you look at their delivery numbers for this quarter, it's not good. 52 buses in Q3 versus 53 in Q1 of 2020, 54 in Q2 of 2021. So when it comes to the buses, the company is flat and not really making that much progress. That is a huge issue, right? But keep in mind, they are facing the same supply chain issues as everyone else, and they have to cope with a lack of materials. As long as they don't have 100% of the bus complete, they can't deliver it. So the CEO was complaining about those wiring harnesses that we talked about in the intro. Now, what I like about the company is that they're diversifying their product offering. They saw that, those battery packs were a big issue in the industry. They were lacking the supply, and that was holding them back, right? That was preventing them from delivering vehicles. So in the previous quarter, they established a strong relationship with one of the suppliers. They are getting a lot of battery cells now, and Proterra is actually building packs that they are going to be using in their own vehicles and also selling to other companies. Right? So they established partnerships with Komatsu, I don't know how to pronounce it, and then Lightning eMotors and some others. So that is great, right? The company is expanding laterally, and eventually it's also going to be expanding vertically. That's perfect. That's exactly what I want to see in my growth stocks. So I feel like the company is putting all the pieces in place to have a great 2022 and 2023. Hopefully the supply chain issues get resolved a little bit, they get more supplies, and they are going to be able to actually have more deliveries, not only of the battery packs, but also their buses. Now, one of the things that kind of leads me to think that they will is on the call and in the quarterly letter, they are talking about adding a second shift at two of their factories, right? So for the batteries and also for the buses. Well, on the call, the CEO said that, hey, they didn't really want to add more shifts, right? If they didn't have the supplies, and it made no sense to bring in people to then not have anything to do at work. So now that they are actually easing up the supply chain problems, they're getting more supplies, they are actually adding shifts, so their production is going to increase. So in the next quarters, we should see more deliveries by Proterra, and to me, that is a big plus. Now, one more thing that kind of flew under the radar, people talked about it a little bit, but to me that is a game changer, is early on in the quarter, October 13th, news came out that one of the vehicles in Massachusetts, a school bus, was used for 50 hours during the summer to power the grid. What's called the vehicle to grid technology. This is a game changer. What's going to happen is if these vehicles are equipped with power to grid technology and it gets mass adoption, what they're going to do is during the night when power is cheap because everyone's sleeping, they're going to store that energy in the battery packs in the vehicles, and then during the day when everyone cranks up their air conditioning, they're actually going to sell that electricity to the grid at a better price, and everyone's going to benefit from that. So Proterra is going to sell more. The company or the school board that actually buys these vehicles is going to make a little bit of profit from the energy that they're selling to the grid, and then the environment is actually benefiting from having more electric vehicles on the road. Right? So everyone benefits from this. This is a game changer to me. That's one of the things that kind of flew under the radar, and the stock is very attractive at this price. It went down a lot. So for a while, it kind of went at $10 and even under $10 at some point. I've been heavily selling puts on this company, and now it's rebounded to $12. This is the one stock where I actually plan on building a position in the fourth quarter. I'm generating tremendous premium, so I strongly encourage you to look into Proterra in the fourth quarter. I do think that, it might not be like right away that the company is going to like grow and improve in the next quarter, but in the next year, next 2 years, this is one of the best bets in my opinion, at a measly $2.67 billion. Next up, we've got Lion Electric, and this one is a little bit more disappointing. They had very, very high projections. So they kind of like led us on as far as what the company really was going to achieve in 2021, and that really rubs me the wrong way. So they were supposed to be more productive than Proterra, right? And they were supposed to ramp up their production very quickly. They have several vehicles already like completed, just ready to be mass produced. Well, it turns out it's not the case. They only delivered 40 this quarter for 11.9 million, and that is way behind their production goals. So the company overpromised, under-delivered. That's not the way to go in my opinion, and I'm very disappointed with it. So they, like, on the call I kind of learned a little bit about the company. So the CEO said that after the quarter they managed to complete 50 more of the vehicles. Maybe that's going to be reflected in the Q4 earnings. Maybe they'll have amazing numbers, and you know that this would have been a good opportunity. But I'm more in a wait and see type approach with these companies. Like, we've been burnt a lot over the past year, so for now I'm more like staying back, looking and seeing their actual progress. And if I see progress, I'm into it. If I don't see progress, I'm just going to hold back. All right, so another thing that really kind of like I found dodgy was when one of the analysts asked the CEO about the Amazon contract and if they were on pace to fulfill it and all of that. The CEO was very evasive. He did not want to talk about it, and I thought that was a little weird, right? Remember, like, the Amazon contract was one of the things that really like made us excited about this company. Oh wow, they have backing from Amazon, so that must be a good deal. Well, it turns out that, you know, we don't exactly know how that is progressing. Even more so, they actually did start a little bit of work on their factory in Joliet, Illinois, but they only have 90% of the shell complete at this point. They are not tooling it yet, they're not producing anything out of it, so that's not going to be until late in 2022 if they actually like fulfill that timeline, which the company has not proven to us that they're able to do at this point. So maybe it's going to be in 2023, and who knows what the landscape will be in 2023 when it comes to electric vehicle companies. So I liked Lion Electric a lot when it was a SPAC. It had great momentum. But at the current state, I'm not as excited about it. I would put it much lower in the rankings, and it's more of a wait and see for me. Like, if I see them making progress in the next quarter, then maybe I'll be more excited about it. Maybe I'll want to build a position. But at this point, maybe I would sell puts on it, you know, and collect cash flow. But I would not be buying shares personally. So that's it for Lion Electric. Again, pretty big disappointing quarter. Last but not least, and I know this was a long video, but let me tell you a little bit about Lightning eMotors. If you guys remember, if you've been around for a while, you know that this was one of my favorite companies for electric vehicles. Now, let's be honest, this is a company where the ceiling is fairly low. It's never going to ramp up to be as big as Tesla and deliver 241,000 vehicles in one quarter, right? That's not the type of company that Lightning eMotors is. But at 610 million, it has a very good risk versus reward because the company doesn't need to grow much for this to be a steal of a deal at the current price. All right, so they delivered 43 vehicles, which is very small, and 6.3 million in revenues. They are one of the companies that is struggling the most with the supply chain issues because think about it, like let's say that one of the suppliers gets a batch of parts. Are they going to call Lightning eMotors first? Of course not. They're going to like serve the big boys first, and then if they have any spare parts left, they're going to throw them at Lightning eMotors. So that's been a big issue. The company is struggling with that. So what they're doing is they're trying to establish new relationships with different suppliers, one of which, very interestingly, is going to be Proterra. Proterra is going to supply them with battery packs, so that's great for my other investment in Proterra, and it's also going to be good for Lightning eMotors, where if they have more supplies, they're going to be able to deliver more vehicles. Because this company has a huge backlog of orders from different like big partners and customers. So that's one of the things that I actually like about them. So let me read you really quickly like this little paragraph. We began deliveries on our agreement with Forest River, which is a potential value of up to 850 million, and expect to deliver additional zero-emission shuttle buses through the end of the year. Further, the first 9 zero-emission vehicles were delivered under the Collins months bus agreement, which include an initial firm order commitment worth around 11 million to deploy over 100 all-electric Type A school buses across the US and Canada. So as you can see, they have a big backlog. Now all they need to do is actually get the parts to deliver on these vehicles, and the company is going to do much better in next year than they are right now. So the share price is fairly low, right? It's been really beat up. It actually went up to like $16.75, $17 when it was still a SPAC, and then actually crashed all the way down to $6. So since then, the stock has recovered a little bit when the news was announced about that big $850 million contract. And what they do is they do vehicles that other companies can't really do. So that is their niche, right? So big companies like Tesla, let's say that Tesla does the semi, right? Well, they want to mass produce them, while Lightning eMotors focuses on small batches. Like let's say a company wants to order only 100 that is very customized. Well, Lightning eMotors is going to be able to fulfill that, while a bigger company wouldn't really take on such a small order. So it is a niche company, but that's not a big problem, right? It's only worth 610 million. So the share price actually went down after that, right? Now it's settled around $8. What I like about the stock, I've restarted building a position in the warrants. I made a video about this recently. You guys can go back and watch it. So these are some of the best warrants in the stock market, because the company cannot call them until either they expire in 5 years or the stock reaches $18. Well, now it's at $8, right? So that means that we have a long ways to go before they actually call them due. So for now, you can actually get a lot of exposure to this company without spending a lot of money, since each warrant currently is only at 154. So I'm rebuilding a position in the warrants. This is kind of like I'm just leaving it in my account. I'm waiting and letting the company like build back and grow over time, and eventually if it reaches $18, the fair market value for these warrants is going to be $650, so I'm going to like basically quadruple my money. So that's my plan for Lightning eMotors. That's another company that I really like, even though, let's be honest, it is a very, very small company. So if you're not into microcaps, that's not the company for you. But, you know, risk versus reward, it is one of the best when you look at these 9 companies. So guys, I hope you really enjoyed this video. I hope it really helps you understand the landscape for electric vehicles. If you like this video, please like and subscribe. And of course, if you want to join the Patreon, it's fairly cheap. You can look at the link in the description. I make a lot of plays. I've done really, really well since I opened the Patreon. I've actually generated $35,000 in profits for myself. Hopefully the Patreon members are also profiting. But if you want to get access to it and check it out, link is in the description, and I'll see you guys in the next video.